On the line from Cape Town now is Andrew Canter, the Chief Investment Officer of Futuregrowth, who, well, dropped a bit of a bomb today with the announcement that Futuregrowth, which was about to lend nearly 2 billion rand to 3 state enterprises, is not going to do so anymore. Andrew, this is pretty unprecedented as far as we know from a South African context. Is it something you've ever done before?
Well, it's not unusual for lenders to pull lines from various borrowers for various reasons at various times. To do so with the SOEs is extraordinary, but then I think we're living at an extraordinary moment that demands a different set of questions than what we're used to asking.
1.8 billion sounds like a lot of money. In terms of your portfolio, is it?
So we manage about 170 billion rand in total. About 150 billion rand of that is probably domestic fixed interest. We are big funders to the SOEs, and in addition to what we've already got as exposure, 1.8 billion is a big number. So yes, it's enough to get our attention.
And which companies, state-owned enterprises, are not going to be getting the funds that you intended giving them?
Okay, so I think there's an important question there: is why did we choose the big six? And that is who we've identified sort of in the first wave, if you will, is the IDC, the Land Bank, the Development Bank of South Africa. All three of those being lending entities, state-owned lending entities. The other three being SANRAL, South African National Roads Agency, Transnet, and Eskom. Those being more industrial or developmental. And that does not say it's all the SOEs, but these are the SOEs that we do see and have seen in the capital markets funding, capital market instruments and money market instruments in scale and continue to see. So, for example, we haven't put SAA on the list. We have no exposure to SAA, and frankly, we ain't going to start looking at SAA given what we know about them at the moment. It's not even a question. So these are the entities where we have big exposure. We're looking at new loans. They are looking for capital as we speak, and so we need to get through a process pretty quickly to know whether they are creditworthy borrowers in the long run.
When you said SAA that you wouldn't be giving any money to, what's the reason for that?
Well, no, what I said was we're not even going to bother looking at SAA, given the machinations we read in the press, that without even doing any analysis, what we know about the financial statements and financial status of SAA and the political machinations that appear to be swirling around SAA. I mean, I don't have the time in my life to spend on wasting time. So we're just simply not going to be in that game. So I'm thinking about credible state-owned entities that are probably creditworthy on a standalone basis, but what we're really worried about is their long-term sustainability in what is looking like a very politically interfering environment, potentially.
Andrew, before we get into those big three that you did mention, what about Denel? That's not on the list. Is that a similar perspective to SAA from your side?
Yeah, I think the secondary SOEs like Denel or AXA could easily be companies we're reviewing in the near term, but that on the other hand would not borrow from us at the moment, and we had to narrow our scope. As we get further down the list. And know which questions that we need to ask and what answers we're going to be looking for, because this is a journey for us and for all asset managers, I think. We'll get to the rest of those later on. But I think and by the way, those entities you've named or that I've named are not in the capital markets looking for money right now. So it's not important to make that statement right now.
Eskom is.
I think, Alec, I want to go down an important side road, and that is we are not making a statement about the creditworthiness of these companies today. All of these entities we are actively exposed to, we have been lending to up till very recently, and they are good credits now. They have strong balance sheets, they have strong management, they have credible business models, all of them. They have state support when necessary, as say in the case of Eskom. So it's fine. It's not a credit today. It's a loan you talk about for 5 or 10 years. And if you think about a lending entity, a land bank, for example, I mean, if a land bank is a lending entity and they become subject to political interference in the lending processes, well, then suddenly land bank on a 5-year view is making bad loans to friends of friends. The loans are going to go to rot. The capital base is going to be eroded. They will be downgraded and become a bad credit on a 5-year view. So what we're saying today is before we make any more loans, we need to understand the governance of these entities, the independence of these entities, the decision-making processes of these entities to ensure that we are helping helping themselves build their sustainability for the long run. That's what we're saying. This is not a panic. This is not, oh my gosh, they're all going to go bust. We just ain't there. These are really credible companies with a good developmental mandate for the nation.
But there's been a lot of machinations around these companies now for some time, particularly Eskom. Why the timing? Why today?
So a good question, and we've been kind of, all of us as citizens and taxpayers in South Africa for the last several years, but notably since December, very conscious of what's been going on in government and what they may or may not do in the center, and what has been emerging as battles between departments, which had gone off the boil for quite a while. And then suddenly, a week ago, roughly, the new charges against Pravin Gordon, which may or may not be true. I'm an asset manager, not a lawyer. I read the legal reports, but it looks like infighting inside the government. That's alarm bell number one. It sets everybody's hackles up and gives us worried. It's just uncertainty. We don't know how to interpret political behavior. We don't know who's right or wrong. It's a lot of swirling rumor. And then the second issue, and this is probably the bigger button for us, is the president announced a new council, whatever council is, to oversee, whatever oversee means, the SOEs. And we think to ourselves, what does that mean? What does it? And give me some context. And there is no context. The only context was some announcement we shouldn't worry about. Well, that's not a context. That's not an answer. And it could be everything from a money grab with nefarious purposes to get control of companies' balance sheets and income statements in a bad way. Or it could be actually a good-hearted attempt by central government, the administration, to improve efficiency, to improve the mandates of these critical developmental agencies. We don't know. And in an environment of we don't know, we don't lend money. And that's good investment practice, right? If the circumstances change, as they did a week ago, you change your investment view. That's what we're doing.
How much of your 170 billion that you have under management is in fact lent to state-owned enterprises?
In aggregate, I don't know the number. It's something on the order of probably 8 billion rand in total. That's all. If you count municipalities and such, it could be as high as 9 or 10 billion rand.
But that's a sizable amount of money. And what would proper...
Yeah. This is... And look, there may be allegations that, Futuregrowth is talking its book so they can blah, blah, blah. Believe me, if other asset managers follow us and funding dries up in the short term for these SOEs, aside from it being a tragedy, by the way, and a terrible thing, but if it were to happen, spreads will widen and Futuregrowth's portfolios, and indeed our clients, will suffer in the short term. We just believe that as an appropriate credit decision, looking back from 5 years forward, I'm going to have to answer to clients for why we advanced the extra 1, 2, or 3 billion rand in this environment at this time, and we couldn't bring our minds to do that.
Andrew, it reminds me a little of what you did with Able African Bank, where you also issued a warning. Nobody followed you immediately, but later wished they had.
Well, I think it's a bit different. The Able warning, you're right. Nobody wanted to follow. But there were people with different bona fide, good, sound investment views of why Futuregrowth could have been wrong. We had a moral view. We turned out tragically again to have been right in our suspicion, but I think there was a credible argument for why we could have easily been wrong there. Management could have changed the direction of that ship. I think in this case it's less less contentious. I would think any investment management firm in South Africa today making loans to the SOEs, and let's be clear, it's not just us. all the asset managers have some exposure. They must be sitting in the same committees, having the same thought process Futuregrowth having, and I would imagine that come tomorrow when we engage with them through the CISA committee, and we try to come up with a common list of concerns and a common list of questions we can send to these SOEs, that it won't be a big fight about it. It'll be, we all need information. We probably all need the same information. So please, let's not write 15 letters to Land Bank. Let's write one letter to the Land Bank. Let's get one set of answers from them so that we can all assess that information and make Land Bank's journey through this difficult period easier. And I use Land Bank as an example, but it applies to the IDC and DBSA and the other three.
What kind of reaction have you had from your counterparts in the industry?
Haven't spoken to them yet because we considered, and one of the reasons we went public with this was because we realized it was substantial enough that it constituted material non-public information. It could affect prices of these bonds. I have to admit, I didn't anticipate the RAND doing what it did today, or the RSA rates doing what they did today. We didn't contemplate that. I didn't think it was that big a deal, but we did contemplate that spreads on the SOE bonds would widen, and therefore we decided that we were going to have to make some sort of public statement if we had material non-public information. We haven't spoken to them as a headline.
It has been a fairly dramatic move. The Rand, which has in the last week gone from 13 Rand 30 to around 14.70, weakened further today. Bonds, the bond rates went up higher again. The bank index, which is already under enormous pressure, again has come under a further pressure. Did you consider, or clearly you considered all of this, but did you consider that it could have as big an impact?
No, and it saddens me. I mean, that's not. I mean, to even have contemplated having to make such a statement, knowing that it would increase the cost of capital for developmental finance institutions that are supposed to be and are working for the development of the nation, and that we knew that or could surmise that we were going to increase their cost of capital really saddens me, and the market's reaction saddens me. It's not my goal to punish this country. Certainly not. Certainly not.
Pravin Gordhan, the finance minister, says that Treasury and himself personally are paying the price for the zealous work that the Department of Finance has been doing in trying to get to the bottom or trying to restrict crony capitalism within the state-owned enterprises. Is that something that resonates with you?
Resonates is an interesting word. We've all been watching the news flow, the stories of procurement gone awry, of oil reserves being sold at weird prices at the bottom of the oil market, of the push for nuclear power against what appears to us, from our view of the power sector, to be a bit of illogic, of whatever all the other machinations that are going on, including these charges against Pravin Gordhan, which, again, I have no insight into whether they're right or wrong because I'm not a lawyer, but the timing certainly looks suspicious. Does it resonate with me? Yes, it probably does, but it's not my place, and I'm not a politician, and the game of politics is to create perceptions, and both sides have to work hard to create their perceptions. People like you and I, sadly, are outside the circle and really don't know what reality is, so we must be cautious not to act on that false reality. We must act on information we have or don't have. As far as these SOEs go, they may be at risk. They may be at risk of some sort of capture by nefarious actors, or they may not be. Our job as lenders, and I think this is actually quite a critical point. If we do our job right with our industry, we will improve the governance and the independence of the state-owned entities. Now, that may sound like a bold political statement. It is not. It is the role of lenders to do that. What do lenders do in the world in the normal course of events? We make loans to people. We put covenants, conditions, warranties, and securities on them so that they can't go out and borrow too much money. They can't overgear. They can't take undue risks. Lenders act always as checks on borrowers. It's what we do. We keep shareholders and managers from going wild. If we do that for the state-owned enterprises and improve the governance reporting around the state-owned enterprises, we will have done a service both for them and for the country. That would be my greatest aspiration.
But lenders sometimes do, in very unusual circumstances, try to effect change. If we go back to 1985, after the Rubicon speech, Willard C. Butcher at Chase Manhattan Bank did exactly that when he pulled or started the withdrawal of lending to South Africa. And we know the consequences, the debt standstill, interest rates going up, and, of course, change that occurred. Are you thinking along similar kind of lines here?
Not really. I just don't think. I don't think it's our job to try to affect political change with pension fund money. It's our job to protect the pension fund money as a core proposition, and that means good lending and good credit practices, and that's what I'm talking about. As I say, whatever this government does, if it creates uncertainty, fear, higher risk for lenders, its cost of capital is going up. I am merely a cog in that machine, and sadly, what we've had to decide to do today is increasing the cost of capital for the country, apparently, as we see the rand go down and rates go up, and also for these entities. And I tell you, I promise you, if we get through this review process and we could sit here in 3 weeks' time and say, look, we've done a deep due diligence of the governance of the IDC, and we are satisfied with its independence and its procedures. And I will do that publicly, in fairness.
Well, ABLE weren't able to satisfy you, or African Bank weren't able to satisfy you that they had changed their ways. What would it take for those 6 state-owned enterprises to convince you to, in fact, do or start lending to them again?
Okay, so it's hard because you're talking about 6 entities with 6 different businesses. So let's just say that there's not a single list. But there are things as lenders that we commonly would look out for with any entity, with any company we're going to lend money to. You're going to look at how their board is structured, how many independent non-executive directors there are, what committees those non-execs sit on, what's the turnover of those non-execs. So, for example, I'm going to look for, if I see a turnover on an audit committee by a non-exec chartered accountant who's on that committee, and the turnover there is every 2 years, it's going to set off an alarm bell. If I see a financial director turn over every 2 years, it's a clear alarm bell from a credit point of view. It's just telling you that somebody who's a chartered accountant who has a standard to live up to and a professional credential to support doesn't want to stick around. So this is the kind of things that first of all, that's the kind of stuff we're going to look for. We're going to look closely at the board compositions. We're going to ask about their policies in terms of PEPs, politically exposed persons. Then we're going to get further down and look, say in the case of lending entities, IDC, Land Bank, and DBSA, who's on the credit committee. What's the mandate of the credit committee? How are there how many independent non-executives are there? How do they deal with large size loans or connected loans? And we may actually, if we're sitting here in a few months' time doing a bilateral loan of, say, we're lending R1 billion to the Land Bank, we may say that as a requirement of that, we want to see any loans granted in excess of 500 million rand. It could be a reporting requirement under the loan agreement. That would also not be unusual necessarily. So as I say, each entity we have to approach individually, but it's all about assessing the veracity of their governance and the independence of their governance. Obviously, in the current environment, we're going to look to what their reporting lines are. So, for example, as we sit today, the Land Bank, I think, reports the National Treasury still, which happened several years ago. And so that's probably a pretty good and robust reporting line, assuming National Treasury maintains its current status. Whereas other state-owned entities report to different ministries. IDC reports to the Ministry of Economic Development. Well, maybe his agenda is less financial and more developmental, and therefore his acumen for credit decision-making is not as good as somebody who comes from a financial background. I don't know that. Understand, I'm giving you a for instance, not an assertion. These are the questions we'll be looking at and asking.
But Andrew, in 2014, when there was a new Minister of Public Enterprises, she changed the boards of those public enterprises whole scale and put some rather strange people onto the boards, including a director of the Gupta Enterprises onto the board of Eskom. Again, I get back to the timing of your decision. This has been in the public domain, that kind of action, for a while. The timing coming today.
Okay, so a couple of things. We stopped lending, particularly to Eskom. We only were buying, and the market was only buying the government-guaranteed bonds. Now, there was a loan to Eskom at that time. You could kind of get away with the simplistic argument that you're buying government credit. I think what you said is true, and I think it's my shameful answer is that perhaps we should have listened then and paid more attention then. So, mea culpa.
But at least you've done it now. But I'll give you the other side of the story from the Zuma camp, if you like. Zuma's people saying, well, this is just Andrew, being dramatic. How would you respond to that?
Well, I suppose it goes to my motives and intents and, whether I'm playing games with the market, and I've just demonstrated to you that I'm not. I don't have to answer that charge, really. This goes to the minds of the asset managers, the pension funds, and the consultants that service those pension funds, and whether they think we're on the right track. The feedback I've got so far is very positive from all those people.
The other thing is,
and I believe we come tomorrow, when we're speaking to our compatriots, there will be strong and unified support. That realization that we're all in the same boat with a lack of information, and we need information to make intelligent investment decisions that we can stand behind and be accountable for.
Are you expecting then that others from your industry tomorrow will say we agree with Futuregrowth, and we also want to have these answers? Is that what you're telling us?
Well, I would hope that they'll find their own words, and it's not a matter of agreeing or disagreeing with Futuregrowth, but they sort of come to their own realization, and we all get together and have a cup of coffee and make the right list of people to ask questions of and what questions to ask. But yes, I do expect that.
Because the Zuma camp again is saying they doubt that there will be a general strike on investment by the financial sector. From what you've suggested, and certainly the questions that you're asking, any responsible investor should be considering those, there could be a general strike.
So I'm trying desperately hard to stay out of the political realm here. I am willing to admit I do not know or understand the machinations of this government or the parties on the sides of the various debates. I don't know who the Zuma camp is. And so people must say what they must say. I think I saw one tweet where I was accused of being a racist shill of the National Treasury today. I am not a racist shill of the National Treasury. I'm a credit guy making loans with people's pension funds, and I want to be proud of what we do and to be able to be accountable for what we do. It's almost as simple as that.
Is it aligned with your overall purpose at Futuregrowth, which you've always said is do good in many ways, to have impact investing that does good for the country?
It's really interesting you say that, because as we contemplated this decision on Monday night, because these decisions are very recent, and I sat there at my desk and thought about it, I went back to Futuregrowth's purpose statement. We have a one-page written purpose statement that we kind of buy into, and it says right there, yes, we want to play a positive role in society we live in, and separate line, we want to be proud of what we do. So it does very much hark back to our purpose at Futuregrowth.
And the question as well that is being posed by, if you like, your critics, they're saying, well, this is just white monopoly capital trying to effect regime change.
Yeah, that's the racist argument. Apparently in South Africa today, if you disagree with somebody and that somebody happens to be a different skin tone than you, black or white, you're a racist. It's actually a lot of bullshit, frankly. We're making decisions. We're having dialogues with a range of people, white, black, and otherwise. My team is not all white. I'm a white guy. So what? This was a unanimous decision by a very racially diverse group of investment professionals applying their minds. Somebody doesn't like it. They want to wave the racist card. I think they're just being children. They must stop it now. They're damaging the country.
Andrew, just to close off with, internationally, have you had any feedback from people that you know from the global environment?
Well, the story went out on Bloomberg, and in fact, I did a video on Bloomberg tonight. I would imagine there will be feedback because, well, the international market reaction was there. I mean, you could see the rand sell off immediately after this